here's a little training for you guys on how to handle being wrong, right? So we're going to be wrong, and we're going to be wrong a lot as a trader. Let's just get used to that now. I preach this so much because the more you understand that you're going to lose, the more nonchalant it's going to feel when you actually take those losses. So start getting accustomed to it. Like I've mentioned before in the past to some traders that have been with me here for a while, every trade that I take, I look at the risk, I analyze it, I tell myself I'm already down this much money. So if I'm able to make money, I'm ecstatic, right? I'm happy. I go into every trade expecting to lose. Why? Because it's not my job after I take entry to push the stock up. I can't sit there at the computer screen and blow the candlesticks higher or blow the candlesticks lower. Once I'm in the trade, I'm in the trade. The only thing I'm in control of is stopping out when I'm supposed to stop out. So we can be wrong, but we can't be wrong financially. What that means is that if we're going to be wrong, we need to limit the risk to the downside, right? We need to make sure that we're not averaging down. I never average down on a position. So let's just get that clear right now. Never average down on a loser. There's no point to doing that whatsoever. You can just find another trade setup. Again, so not being wrong financially means that we could take a little bit of a loss. We're going to take those losses, but we're not going to ever get devastated. We're never going to get blown out of the water. Okay. We're never going to blow up an account on one particular trade because, for one, we're never going to be sized to a point where one potential trade on one potential loss is going to ruin our funded account or blow up our personal account or cause us to get liquidated. We're not going to do that, right? So we can be wrong until we're blue in the face, but we're never going to be wrong financially. Now, again, because everything in trading is probabilities and everything runs over a series of trades, and our edge is not going to work each and every single time, we need to make sure that we can withstand losing 10 times, losing 15 times. Analyze your risk. Can you take 10 losses at what you're risking and still be able to trade? Now, the odds of you losing 10 trades in a row are probably slim to none. And I can't say 100% because I don't guarantee anything. Again, they're very, very low that you lose 10 trades in a row. With that being said, are you going to lose 3-4 trades? Sure. But let's keep those losses small. And when we do win, let's try to maximize those profits. Okay. So for example, when I was talking about this morning in the Discord about the futures potential pop here, what I was looking at in that pre-market session was this linear regression. Okay. So for some of you guys, I don't know if it was someone in here that asked or maybe someone on YouTube. The settings for this is just a linear reg, REG, which stands for regression, linear reg channel 50. That's what I talk about when I'm talking about the LR or the top channel or the linear channel. That's what I'm talking about. The settings on this is as follows. It's stock settings. Like, I'm not doing anything to this other than changing the color, right? So, you know, the width is 1, the style is just a plain line. Like, it is what it is. I'm not really changing anything. Price to close, upper price to close. It's pretty standard, right? So with Thinkorswim, linear regression, channel 50, that is what it is. I'm not changing anything on it. Now, I use it on all time frames. So this is particular time frame is a 5 minute. And this is where it plots me on the 5 minute. That's it. I don't overanalyze it. Thinkorswim says that this is where it belongs. That's where it belongs. So the level that I was looking at was around 15,360 in that range, 15,350 something, right? So if I was looking at the high wick here, I'm also looking at the linear regression channel. What I want to see happen is I want to see us get over the linear regression. So there's one to two ways we can go about this. We can take a first entry when we take out the linear regression and we take out these pre-market highs. Okay, so the 15,538, as soon as we break through it, you can see here at 6:45 in the morning, we break through it, you can take a first entry there. Now, I was mentioning to someone this morning on the voice chat that when we take a first entry like this, where, you know, we're taking the first time it breaks a specific level, it can be a little bit more dangerous. I would recommend, for a little bit more experienced of a trader who knows how to handle their risk, get in and out of trades, just due to the fact that sometimes I'll see it pop and then the next candle will just flush right back down, right? And the newer trader will get scared when it just flushes right back down. They'll give away all their profits and then now go into drawdown and be wondering what to do, looking like a deer in the headlights. So again, if you've been around the game for a little bit and you have some confidence and you're okay with the risk, you know, you can definitely take a first entry, boom, get in once we break here and then try to scalp on the way up. Again, move your stop loss to break even once that candle closes, so that way we're not losing any more than, you know, we put in, right? And then, you know, take every push higher, depending on how many contracts you're holding, you know, try to scale out along the way. And again, you know, start taking profits at least 2, 3, 4 pushes higher. So in this particular case, 1 push higher, 2 push higher, 3 push higher, 4 push higher, you know, that's a home run trade. You guys should have, you know, make sure you locked in some profits. If you really look at the run up here, 15,358, let's call it 15,360, ran all the way to a price of 15,441. So about an 80-point move, 90-point move, give or take, right? Give or take, you know, like don't quote me per like to the handle, right? Like it's over 50 points. So that's all that really matters. Now, if you want to tighten up your stop where you want to kind of let the trade run, like let it run, trail it with the 5 SMA. So put the 5 SMA on your chart, just trail it. So what that means is look at how we break over it, then we put in a new high. Look at how we're above this green line. That's a 5 SMA. So we're above the green line, we're above the green line, we're above the green line, we're above the green line. Uh-oh, 7:10 in the morning, we close below the green line. Get out of the trade. Short-term trend, power trend is over. Just get out. Can it close below and then make a new high? Sure, but our trade is over. The initial trade that we took is over, okay? So trail it with the 5. You're gonna see good results with that. Now, going back to we can be wrong, but not wrong financially, our stop on this play, because this candle is so extended, if we look at the bottom of it, 15,321, our entry price 15,358, we're looking at about a 20 to 25 point kind of hard stop, right? So this is our hard stop. Financially, we're not going to lose more than that. Financially, okay? That's what's going to keep us in the game. That's what's going to allow us to trade again and again and again and again and again, right? So that's what I mean by we can be wrong, like we can get stopped out, but we're never going to get blown up, right? So we can be wrong, but not wrong financially. So again, if you want to tighten that risk, when we get in, just use the 5. Like as I mentioned a couple minutes ago, hard stop is our max pain, meaning that's how we're not going to be wrong financially. We're not going to get blown up. We're not going to lose our wife and our kids because of this. There's our stop loss. Breathe. We're protected. Okay. Breathe. We're protected. But let's tighten up the stop loss with the 5 or the 10. Sometimes I use a 10. Sometimes I use a 5. Depends on the risk, right? Because every candle is not the same. Some candles might be a 10 handle, you know, kind of one stop. Some might be 30, some might be 25. When they're a little bit bigger to that 20, 25, 30, typically, you know, I'm going to trail it up a little bit with the 5 or the 10. And when it's a smaller candle, maybe say it's like 10, 15 handles on the NQ, I'll give it the full 1 bar, right? Like I'll give it the full 1 bar. We can do that. You know, like if you just kind of look at this last play here, you know, 224s down to 25, so it's about 20. I'll give it the full 1 bar, right? Like let it work. Like can I get 1-to-1? Can I get 20 handles, risking 20 handles? I'll give it the 1 bar. On something like this where, you know, I don't know that it's going to run 50, 60, 70, 80 points, you know, I'm going to trail it from the jump, and then my max pain stop loss will still be there. So we can be wrong, just don't be wrong financially. If you never know when to get out, your reason why candle, your entry candle, whatever you're using it, whatever you want to call it, don't lose more than that. Don't lose more than that. So when in doubt, are we below that 1 bar stop? If we're below the 1 bar stop, get out of the trade. Just get out. There will be another one. Understand this as probabilities. Even though we have an edge and even though we have a strategy, each individual trade has no correspondence, no correlation to the last trade we took. If we get a short setup, has nothing to do with the previous one. If we get a long setup and another long setup and another long setup, those trades have nothing to do when it comes to probabilities with the last trade. It doesn't mean because you won the last trade, you're going to win the next one. Each trade is an individual trade. So treat it as such. understand that some of probabilities you're going to be on the right side, some probabilities you're going to be on the wrong side. So again, always protect yourself with that max pain loss. But if you really want to start like trailing and allowing your runners to run, trail it with the 5 SMA. See how that does, right? This game is about finesse. This game is about learning what to do. So make sure you guys start learning what to do, what works for you in your trading style and in your personality, right? I got the blueprint. I can help you guys with the blueprint. But again, we got to do what feels good to us at the end of the day, risk-wise, and how long we're holding these runners. And you know, if we're trading NQ versus ES, there's nothing wrong with trading the ES. There's nothing wrong with trading the Dow or, you know, the Russell. Doesn't matter. They're all the same. You know, they got candlesticks. They go up and they go up and they go down. It's all the same. I hope this video helps you guys.